Imagine, right? You've worked your whole life, saved up, invested wisely, and then bam, poof, it's all gone.
Yeah, because some slick operator decided to run a scam.
And unfortunately, that nightmare, it wasn't just a bad dream for a lot of folks in India.
Oh, no, not at all. We're talking about some of the biggest stock market scams the world has ever seen.
So today, we're going to take a deep dive into these scams, figure out how they worked, and the kind of impact they left behind.
Because, these things, they don't just disappear. They have real consequences.
And that's why we're doing this. So hit that like button, subscribe to the channel, keep yourself informed, and avoid these traps.
Absolutely. Knowledge is power.
Right. Okay, let's rewind the clock back to 1992. Harshad Mehta, ring a bell.
Oh, yeah, Mehta, a name synonymous with, financial chaos.
The Indian stock market was on fire at the time, and this guy, he was like the rock star stockbroker.
Promising investors the moon.
But as we know, not all that glitters is gold.
No, sir. Mehta, he was playing a different game. A dangerous one.
So break it down for us. How did he manage to pull this off?
Well, he found a way to exploit loopholes, right, in the banking system.
Loophole? What do you mean?
Think fake bank receipts, using those to get loans, tons of them.
Hold on, he was basically creating money out of thin air.
Pretty much. And with all that money, that's how he manipulated stock prices, creating this artificial bubble.
And people bought into it. Hook, line, and sinker.
Well, yeah, because on the surface, it looked legit. The market was booming. Everyone seemed to be winning.
Until it all came crashing down.
Exactly. And when the truth came out, oh boy, the market tanked.
Billions. Gone. Just like that.
Investor savings wiped out. It was a huge wake-up call for the Indian financial system.
And it really exposed just how vulnerable things were.
Oh, absolutely.
And what's crazy is, barely a decade later, another scam pops up.
Ekan Parekh.
Parekh. Another one with a knack for, well, let's just say, bending the rules.
But how does something like that happen again so soon after Mehta? Well, Parekh, he was a student of the game, you could say. He took a page out of Mehta's playbook. Circular trading, price rigging, the whole 9 yards.
Hold on. So it's not just one guy, right? He had a whole network.
Oh, yeah. A network of companies all working together to, deceive the market.
Trading shares back and forth, making it look like there's this huge demand.
Exactly.
Yeah.
Pumping up those prices, creating this illusion,
It's amazing, and by amazing, I mean terrifying, that this could happen again.
Well, it shows how determined these folks can be, and also maybe how the lessons from the past weren't learned.
Right. So we've got Mehta manipulating the market, Parekh doing the same, but then comes the Satyam scandal in 2009. And this one's different.
Oh, very different. This time, it's not a stockbroker. We're talking about the founder of the company, Ramalinga Raju.
And he wasn't playing games with bank receipts or fake companies, was he?
Nope. This was straight up accounting fraud. Cooking the books, as they say.
Making the company look profitable when, in reality...
It was a house of cards.
Wow. So this guy, he wasn't just manipulating the market. He was manipulating the very information about his own company.
And doing it for years, successfully.
I mean, what was the fallout from that?
It wasn't just financial. This tarnished India's reputation on the global stage, especially in the IT sector.
Yeah, that's a big deal.
Investors around the world, they got spooked. Trust was broken.
It really underscores the importance of corporate governance, transparency, all that stuff.
Absolutely.
And then there's 2013, NSCL. This one is almost too crazy to believe.
Oh, I know. Trading in commodities that didn't even exist? I mean, come on.
How does that even happen?
Well, the National Spot Exchange, they allowed traders to buy and sell contracts for things like agricultural goods, metals, you name it.
Right, the commodities market.
But the catch was, a lot of these commodities, they were phantom. They weren't real.
So it was like a massive game of pretend. People were buying and selling things that weren't there.
Pretty much.
And I'm assuming it all fell apart when people actually wanted to, claim their stuff.
Exactly. The exchange couldn't deliver because there was nothing to deliver.
Mind-blowing.
And of course, the result was the same. Investors lost a ton of money.
And it really exposed the lack of oversight in the commodities market.
Right.
So, I mean, what have we learned from all this? I think the big takeaway here is whether it's the stock market, commodities, whatever, you got to be careful out there.
Oh, absolutely. Do your research. If something seems too good to be true, it probably is.
Right. Don't get caught up in the hype.
Think critically. Question everything.
And if you want to learn more about scams, how to spot them, how to avoid them, make sure you hit that subscribe button. We'll keep bringing you these deep dives.
Stay informed, stay safe.
And remember, knowledge is your best defense. Don't forget to like, comment, and share this video with your friends so they can learn too.
Spread the word.
All right, thanks for joining us, everyone. Until next time, stay vigilant.
See you next time.